AI in focus again as technology takes a beating, oil up on geopolitics, and the gold bounce fizzles. All right, yesterday's session had a pretty clear vibe, risk off in technology and a further rotation into cheaper parts of the markets like value and cyclicals. The S&P was down close to 0.5%. The Nasdaq really took a beating, down close to 2%. AMD got a massive smack, 16% down after revenue forecasts disappointed markets. However, it once again wasn't all bad news. 6 of the 11 S&P sectors ended green. The Dow eked out a small gain as well. So even though tech got slammed, if you compare the S&P equal weighted index, for example, that finished higher on this session. Now, when we consider the current backdrop of stable inflation, hot growth, and this week's hot ISM manufacturing and services data, it's not a surprise to see a little bit of rotation into those value type names. And as usual, whenever technology falls, a lot of people are shouting overvaluation from the rooftops, but show me a time in the last 25 years when valuation by itself was a reason to get out of tech completely. We've seen many bouts of rotation before, and none of them ended tech's reign, and I doubt that this time will be any different. Now, turning to FX, the dollar was firmer and rates mixed after the ADP report showed private payroll data coming in at 22,000 below market expectations, but the solid ISM prints kept momentum up for the US dollar, as well as comments from Besant once again talking up a strong dollar policy. The yen was the weakest as markets added to shorts ahead of this weekend's Japanese elections, with the PM basically coming out saying that she likes the yen weakness. One can't blame markets for jumping back on the carry bandwagon. But just take note that the intervention risks will come back into focus should we push back into that danger zone between 158 and 160 on the dollar yen. Now, in commodities, gold's recent bounce fizzled out a little bit as equities tumbled. Well worth reminding that it's not uncommon for gold to sell off alongside equities when volatility picks up like we've seen recently. We've also seen oil higher once more as negotiations between the US and Iran catches a little bit of a speed bump. Definitely something worth continuing to watch in the short term. For the day ahead, Alphabet's results will be a big one. Markets want proof that massive AI spending is turning into top-line growth for these companies. Solid earnings that validate this spend could see some stabilization in technology. If not, the rotation into value probably has a little bit more room to run. Apart from that, we also have the Bank of England and European Central Bank policy decisions coming up later in the EU session. Hope you guys have a fantastic day ahead.